All right. Good evening, everyone. Okay, so thanks, Benny, and of course IG for inviting me to this session here and giving me, of course, the opportunity to share a little bit more in terms of, what I experience, some of the knowledge that I have in terms of trading. Okay. So today's session will be focusing on this strategy, or I would say this methodology, called supply or demand. Or some of traders would actually call it structure. They're basically different names and terminology to quite similar principle. Okay, and I would say that the name itself is not like the most important thing. At the end of the day, it's really the understanding of the concept, understanding of the principle itself. Okay, and of course, how we actually apply it in the real life market. Okay, so today's session here will be having a pretty sufficient time to really go through in details. Okay, where what I'll be doing here is to walk you through the concept, via a slide format, so that you better understand the principle behind supply and demand, the strategy behind it, and then after that I'll jump into the charts to really show you the application of it as well. Okay, and hopefully, of course, we'll then be able to also identify some key opportunities that you can keep track of, not only within this week itself, but the application of it, you'll be able to take it, apply it on your own trading in the future too. Okay, and of course, if you guys have any questions, do feel free to send them in. Okay, I'm not sure if you guys can type into the chat, or there's a question tab. Do send those questions in, and we'll definitely have some time to answer the questions as well. Okay, so let's get started with a few key definition first, right? I think that's important to have some lingo, some terms where usual supply and demand traders or structured traders, order flow traders, would kind of use, so that as we go into the charts later, some of the terms, shorter terms, you understand what they mean, right? So let's talk about market structure, right? Because I think this is the most important foundation if you want to trade order flow, or if you want to trade supply and demand. Okay. Oftentimes traders would jump into a chart and kind of immediately want to identify where to enter, where to exit, where's the entry opportunities and things like that. But the first thing always is to determine, I call it directional bias, right? Now, obviously, there are many ways in which we can determine our directional bias. It can be through fundamental analysis. It can be through technical analysis, where technical analysis can be broken down into indicator-based, price action, etc. Okay, the methods and the ways, there are just so many out there. Okay, so today what I'll share with you, this methodology is one of the many ways. Okay, but whatever it is, the first step when you open up a chart, or you want to trade a particular asset, you always need to establish your directional bias. Okay, so today we are using structure, we're using order flow to define and determine the directional bias I'm going to be focusing on, right? So naturally we have two different structure here when we're talking about supply and demand, right? We have the bullish market structure, which is pretty straightforward. It's basically an uptrend. And then we have a bearish market structure. Okay, now a very unique perspective from order flow or market structure, you call it. I think moving forward, we just call it order flow. Okay, the very unique thing about this method here is we don't really have a definition of a range market. Okay, now the market can be ranging, can be in a consolidation, but we still define the overall structure either as a bullish or bearish market. Okay, so to give you an idea, right, essentially it's like if the market is moving higher, okay, but at the same time, if it suddenly pauses and take a significant time to do its retracement, it can still be in a bullish market structure. Okay, so in a while I'll show you some examples in the market as well, but just bear in mind, okay, in order flow itself, we don't really have a definition of range bound. Okay, so we generally, the market is either in a bullish structure or a bearish structure. Okay, so there are some terms that I just want you to be familiar with as well. Okay, And of course, once you understand these terms, it can make common sense, right? So the whole idea of a bullish market structure or a bearish market structure, right, is where we have a series of higher highs and higher lows, or lower highs and lower lows. Okay. Now, how do we define when the market is making a higher high or higher low or lower or lower high? Is when we have this thing called a break of structure. Okay, sorry, let me just clear the color a little bit. Okay, break of structure, or in short, we call BOS. Okay, so the definition of a break of structure is where we have the swing highs and swing lows, market close above them. Okay, so I just do some illustration for you, and then we'll jump into some of the charts later on. If we have a series of higher high and higher low, okay, we need the market to break this swing high, and more importantly, candle has to close above the swing high. Then we call this a break of structure. Okay, similarly, if the market is coming down, okay, we have swing highs and swing lows. We need this swing low here to be broken, and price needs to close below it in order for us to consider a break of structure. Okay, so in other words, if we get a break but we don't get a candle close and the market wicks back up, then that is technically, the definition is not a break of structure. Okay, so then we also have the definition of swing high and swing low. I think this one, if you have some experience in the market, is pretty straightforward. Okay, so significance, turning point are what we call swing high and swing low. Okay. Now, obviously, when you put in the principle and the concept of multi-time frame, things can get a little bit more complex. But for now, we just stick to like the perspective of a single time frame. Okay, so that's what I meant by swing high and swing low. Okay, and of course, break of structure stands for BOS. Okay. Now, I think you'll also be familiar in terms of when the market trends, it doesn't just go up every other single day. Okay, now sometimes we have strong momentum push. We might get like clear movement in terms of like maybe 1 or 2 days, but eventually what the market will do is that we will experience some kind of a pullback. Okay, and then after that, the market will continue to trend, and then after that, we'll have another pullback. Okay, so the expectation in order flow is essentially every time the market break a significant high or low, which is essentially our swing high and low, when we get a BOS, okay, oftentimes we'll then expect the market to experience some kind of a pullback. Okay, so that's what we call expectation. Okay, it may not necessarily happen immediately, but we often expect it to come. Okay, so you need to have that kind of mental prep. Okay, now things can get very, very complicated very quickly if you don't understand the basis of the foundation. Okay, because once we start to introduce this thing called internal structure, we start to talk about multi-time frame. You need to have your foundation strong. Okay, now what I mean by internal structure is obviously playing around with the nature of fractals in the market. Okay, so as we are looking at maybe on the daily chart, right, we have the trend moving up. Okay, but as the market is going up on the daily scale, on the hourly scale, this can actually go up, come down, go up, come down, and then after that going up, right? So on the hourly scale, it can look something like that, but maybe on the daily scale, it looks very clean. Okay, so internal structure essentially is playing around with multi-time frames. Okay, and just understand that the lower the time frame you go, the more internal structure you are looking at. Okay, now the methodology and the strategy over here, when we're using order flow, we at least want to look at minimum 2 different time frames. Okay, some traders will actually go all the way by using 3 different time frames, right? From the daily to the forward to maybe the hourly or even the 15-minute. And then some traders will use the weekly, going down to the daily, and then maybe using the H1 or H4 to execute those trades. And the principle is more or less the same. It's just the application of multi-time frame as the confluences to your trading itself. Okay, so very quickly, let me show you some illustration, and then I'll toggle between charts and the PowerPoint slide over here. So this you can see very clear some of the shorter form definition, right? This is basically a bullish market structure: higher high, higher low, high high, high low, the market is essentially breaking previous highs. Okay, so that's what we call bullish market structure. And then of course, vice versa, I think this is quite straightforward. The market is coming down, we have lower low, lower high, lower low, lower high, break of structure. And we continue to expect the market to trend until proven otherwise. Okay, so that's the logic behind it. Okay. Now, very quickly, I'll just jump into a chart over here, okay, to kind of very fast illustrate what I mean by swing highs and lows. Okay, so now you're looking at euro dollar on a daily chart. Okay, for now, the time frame doesn't really matter. I just want you guys to at least understand the principles and the concept behind. Okay, so over here, what you can see is we'll just start off, for example, okay, a significant high. The market comes down, okay, it forms a low, it does a pullback, okay, and therefore this forms your swing low. And then when it pulls back, after that, it starts to go lower, and then what you observe is that this low has been broken, and very importantly, price is closed below it. Okay, not only broken, but break and close. Okay, so once we have a break of structure, this immediately would tell you that this is a swing high. Okay, now if you backtrack a little bit, right? Suppose back then the market was here. Okay, at this very moment, when the market is trading at this price point, we know that this can be a swing low, but we wouldn't know that this is going to be a swing high, because if the market hasn't moved lower and break this, we wouldn't be able to conclude that that's a swing high. Okay, the reason behind is the market can eventually pull back more. It can go deeper before coming down and break this low. If that's going to be the case, this would be our swing high and follow that top process, right? So a swing high in a bearish market structure, right? A swing high can only be confirmed after we get a break. Okay, so for example, the market decides to break and close below. This would now establish as a swing high. Okay, can follow that top process. After a break of structure, we would then expect the market to do a pullback. Okay, so how do we define the part where is this going to be my swing low, right? How would I know if this is going to be a swing low? Okay, there are different ways to do it, but a very mechanical way to define that is you can use a little bit of a ratio. If you take from this high to the recent low, okay, we can say that if the market actually pulls back maybe about 38 to 50%, okay, let me just add this in. If the market pulls back towards the 38 and 50% zone, we can then establish that this is a swing low. Okay, so in this case here, as the market pulls back, you can see that we came back towards the trade 2. We can then conclude that, all right, okay, this here, okay, would be our swing low. Okay, so let me just put this down, right? So if the market doesn't pull back towards, minimally maybe around the 38.2 or 50%, what can happen over here, right? I just want you to visualize a little bit. Okay, if it doesn't pull back to dip, the market can just continue to drop. Okay, and when that happens, we'll have this as an entire swing itself until the market decides to pull back quite significantly. Then we establish the swing low. Okay, so at this point in time, you can realize that defining and identify your swing points are pretty significant. Okay, so there are some tips here, right? As I'm dropping down, as long as the market pulls back somewhere between 38 to 50%, you can establish a swing low. All right. So as the market continues to develop, you can see that you continue to pull back. So that's obviously going to be a swing low. Okay, and then we can take away the flip here. Now, what we also have is that this is defined as a swing high. Okay, because that's the part where we got a breakout structure. Okay, pardon me. Text should be there. Okay, it's a bit laggy. Okay, so when we have a swing low, when we have our swing high, for this entire market structure to remain a bearish market structure, price cannot break above this high, right? Because the definition of a bearish market structure is we need to have lower low, lower high. Okay, so this is a lower, this is low, this is a lower high, this is a lower low. Okay, If the market continue to pull back and successfully break and close above this swing high, we do not have a lower low, lower high. Okay, and when that happens, we are no longer in a bearish market structure. Okay, so you can follow the thought process. Okay, why identification of your swing points are pretty crucial, because that is your foundation in defining what market structure you're in. Okay, so as price continue to develop, the idea here is if we get this coming down and break and close below this high, this low, this swing point becomes our swing high. All right, so if you play forward a little bit, right now the market is here. Oops, okay. Right now the market is here. We do not have a break and close below this low. At the same time, the market hasn't broke above that high. So what is the current market structure on euro dollar on the daily scale? Is actually a bearish market structure. But of course, the market has been in a range-bound environment for some time. But we are defining market structure as bearish bias. Can follow that, right? So as long as we're in a bearish market structure, we're only interested to look out for sell opportunity, and any pullback to the upside can be seen as a sell. Okay, so that's the definition of it. Okay, now I'll give you more example. Let's jump into, maybe index, right? S&P. I think S&P then will be very, very straightforward. Okay, so if you look at this, this is where the current market price is. Okay, we have a very, very obvious structure points that were broken here, right? You can see break and close above. Okay, so that would be your breakout structure. Okay, so what is a swing low? A swing low is the lowest point that causes a breakout structure. Okay, so in terms of swing points, swing low, right? We'll take this as a swing low, not this, but here. Okay, because that's the lowest point that causes a breakout structure. So obviously we are in a bullish market structure, right? Because the market is going up, we have a high low, we have a breakout structure, we have a swing low established. Now, is this a swing high and is this a swing low? Okay, that's where you need to define, right? Is this pullback significant enough, right? So if you kind of take a flip here, you can see you came very, very close, right? We barely touched that actually. Okay, so in that case, we can take it as, right, this is not a significant pullback. That's not going to be our swing low. And if that's not going to be our swing low remains here. This can be seen as one move. Okay, so the expectation as mentioned just now, right? We have a breakout structure. What do we expect? We expect the market eventually will need to do a pullback, then only a continuation back up. Okay, so S&P here, pretty straightforward. Now, take a look at some other assets. Okay, go. Okay, so if you work back a little bit, the most obvious breakout structure would be taken from here. Okay, swing high, broke and close above. That's a breakout structure. Where is the lowest point that causes this breakout structure between this high to this point? Where's the lowest point? Here. So that would then be established as your swing low. Okay, and you can see, since then the market didn't really break it, it break above, so we are in a bullish market structure. Now, can we say this is our swing high right now? We need to then measure, right? Do we get a sufficient significant pullback? Not really at the moment. Okay, so in this case here, we can't immediately establish and say, oh, this is our swing high. Okay, because if the market doesn't really pull back towards this zone, and let's say from here it just decides to go higher, then we'll see this as one entire swing, at least from the daily point of view. Okay, but if the market decides to come down a little bit more into this 38 and 50% point, then what we'll define is this would be our swing high. Can follow that entire process, right? Okay, so once we have that, right, as long as the market respects this daily swing low, any pullback is actually seen as a bullish market structure and a buy opportunity. Now, obviously, you don't want to be buying everywhere, but the whole idea is on this particular time frame, we are very clear in the overall market structure, and therefore that establishes the direction of bias. Okay, obviously, you play around with multi-time frame as we progress. Okay, so I'm just giving you more and more examples. So hopefully, the principle and the understanding of swing high, swing low, breakout structure how do you define swing high, swing low, how do you identify them, becomes very, very clear. Okay, hopefully that's so far so good. You guys are following. Okay. Good. Quick check if there's any question coming in. I'm just to let Benny know. I'm not able to see the question tab from my side. If there's any questions, maybe let me know later on. Okay. So now once we understand all those principles that I just covered, okay. The next thing to know is what I mean by strong and weak points, right? Okay. So the whole idea of this is, okay. Let me see. The working, okay, should be. Let me. Okay. So the whole idea of swing high and swing low, okay, we have what we call strong lows, strong highs, weak lows, weak highs. Okay, so what I mean by strong low is basically if today we get a break of structure to the upside, that would define as a strong low, right? Why? Because the swing low itself causes a break of structure to the upside. It's strong. Okay, a strong high is basically when we are in a bearish market structure, right? The high itself causes the lows to be broken. Therefore, the market is in a bearish structure. Okay, so just very, very logically, kind of like understanding this. Okay, now when we form a sharp move away, or what we call a momentum move, where we have like large candle, whatever time frame you're looking at, okay, oftentimes that also tell you that, okay, big money has an interest and those are significant swing points. Okay, so what I mean is that sometimes you see in the market, right, we make a move slowly to the upside, and then suddenly we see a big move coming down. Okay, so obviously this becomes a very obvious swing point, okay, because it causes a significant momentum to drop. Okay, and then if the market swings back up very strongly, then this is also a very significant swing point. Okay, so when we see kind of like a momentum move, oftentimes you want to take note of those swing points because it means that there's a huge demand or a huge supply coming in, depending on the time, depending on the direction that we're looking at. Okay, so the goal of this understanding over here is basically to catch, okay, higher highs and higher lows, and then target the weak points. Okay, what I mean by this, right? Imagine we're in a bullish market structure. Okay, we have a break of structure. Okay, so this is actually our swing low. This is a strong low. So any pullback, eventually this will become our high, but that's a weak high. Okay, any pullback eventually would be our buy opportunity. We'll be looking for buy opportunity because of a bullish market structure. And our first target, our primary target, will be where that previous high is. Okay, we can of course go for more, but this would be our first primary target, and that's where we expect price to eventually hit towards. Okay, so essentially understanding this gives you that, the understanding of like how to put your target. Okay, so I'll give you an example over here. Okay, now if you're in a bullish market structure, all our swing highs are basically weak highs. You expect the market to take it out. Okay, when the market take out previous highs, then we are in a trend environment, right? So when the market starts to show you some sign where it can't take off the previous high, you then need to be cautious because it means that, all right, the momentum to the upside may be weakening. You want to be careful and things like that. Okay, vice versa, if the market is coming down, we're in a bearish market structure, any pullback is seen as a sell opportunity, and we expect the market to take out the previous low. Okay, so essentially that's what it meant. Okay, and of course we have a rough reference in terms of like where our take profit is going to be. Okay, now with that understanding, okay, I want to share with you another terminology over here. Okay, very, very quickly, I'll just skip through this slide. It's called trend shift, right? So there's this term here in the next slide. I'll cover a little bit. It's called change of character. Okay, CHOCH. Okay, over here I kind of put break of structure. Okay, the term change of character and break of structure are quite interchangeably. Okay, that means you can use, again, as I mentioned, it's just a name. Okay, But what we look out for is, you can see in this illustration, the market is breaking structure as we go higher, right? In this phase, we're in a bullish market structure. Okay, then at some point in time, eventually market will reverse, right? And you realize that this one here take out this low. Okay, so over here the term I put is BOS, right? You can say that it's a break of structure, but some traders will put it as change of character. Okay, so what I mean by change of character is an initial indication from the market that the bullish market is no longer in control. Okay, now imagine this haven't happened yet. Okay, at this point in time, in this area here, we do not have a bearish market yet. You can see why, right? Because we only have a high, we have a low. We did take out the previous swing low, but we don't have a lower low, lower high. Okay, so technically we don't have a bearish market structure until we got to this point, right? Because why? We get a break of structure here with a lower low, lower high. Okay, so at this point we can say the market is in a bearish market structure. So from bullish it turns bearish. Okay, then at this point in time, when you take out this high, okay, we don't have a bullish market structure until we reach here. Can follow the definition of it, right? So obviously sometimes you might experience a market where you get a lot of like shift between the directional bias, right? You get a sudden bearish shift, and then from here you get back into a bullish shift. Okay, so during this period of time, of course, on a higher time frame, you'll be expecting the market to be just consolidation. But in this scale itself, we have a bullish market structure, shift into a bearish market structure, shift back into a bullish market structure. Can follow that thought process, yeah? Okay, so if you go over to the charts itself, okay, I'll just take an example of this. Okay, so over here you can see Aussie dollar, just to give you an example, this is on the daily scale. Okay, now if you're gonna work it out, right, I'm gonna pick up from the most obvious point first. Okay, this would be our initial swing high. The market came down, pull back a little bit, right? So that's obviously a swing low because we did manage to pull back all the way towards the 50%, right? So this would be our initial swing low. Okay, then pull back, and then the market decides to break and close below, right? So that swing low now becomes a break of structure, and our swing high comes here. Can follow that, right? Okay, and then the market decides to pull back, and then that would form a swing low here. Okay, but of course, as the market goes back up, you realize that it has taken out our previous swing high, right? So this becomes our break of structure, or initially a bearish move. We call this a change of character. Okay, so from a bearish market structure right now, we are potentially turning bullish, but we can't say that we're in a bullish market structure yet, because we only have a swing low. We do have a break of this previous high, but this pullback doesn't really reach that 50 yet. Okay, you can say that, all right, we may get the 382. Okay, so depending on like how your definition is, you can say that, right, this can be a significant swing high. Okay, so until the market break and close above this, then this becomes our swing low. Then we have a higher high, higher low. We are in a bullish, but until then, right now we are just in the transition from bearish into bullish. Okay, can follow that thought process, yeah? Okay, so it becomes very, very clear in the definition of market structure. Okay, and this is very important because, again, this kind of establish the directional bias that you want to be focusing on. Okay, giving you some more example over here, right? So let's say we are looking at Bitcoin. Okay, so previously you can see Bitcoin is going up, right? So I think this one should be quite straightforward. We have this break. Okay, and naturally this would form a significant swing low. Okay, and of course right now the market is doing a pullback here. We can put this as a swing high here. Okay, so as long as the market remains above this low, any pullback can actually be seen as a buy opportunity, okay, for our target eventually to go back towards where the swing high is. Okay, now what happens if today the market decides to take out this low? Okay, because this is coming down, seemingly a swing point here as well, a swing point here as well. If the market actually breaks this, how do we resolve this kind of situation? Okay, this is where we're going to be jumping into the principal core internal structure. Okay, so what I mean by internal structure is basically all the swing points, all the structure between our significant high and low. Okay, and this is where the principle of multi-time frame and fractal comes in. Okay, so we have this term that I just mentioned just now, change of character. Okay, it's basically the internal change and shift between bullish to bearish or bearish to bullish. Okay, so a bearish change of character is your first internal, the term here basically is initially from bullish. Okay, we start to make lower low, right? That's where our bearish change of character comes in, and vice versa, right? When your first internal high is broken, then that's where your bullish market, bullish change in character comes in. Okay, so you want to think of change of character, right, in the understanding where it's an early indication from the market that it's shifting. Okay, it's not a confirmation, it's an early indicator. Okay, so that's what change of character essentially means, right? So if you kind of take a look at this here, right, we have swing high, swing low. If we break that down into a fractal, you can see that we have minor internal lows and highs. Okay, so if today you're looking at the daily, right, the red color one here is your daily. Okay, and then let me just change the color a little bit. Okay, then green color is your internal. This would be all the internal swing highs and lows. Okay, and of course, as the market is coming down, you get a lot of internal breakup structure too. Okay, now in this phase here, okay, we have what we call an alignment between the daily and the H4 because the daily is down, the H4 is also down. Both are in alignment. Okay, now if we start to shift towards this part here, right, you can see on the H4, okay, we start to have high, 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 low. So this is a H4 change of character. At the same time, this previous high here has been broken too. Okay, so on the H4 itself, we have start to change from bearish to bullish. Okay, in green. But on a higher time frame, this is still your swing high. Okay, on the daily, the red color, right, is still a swing high. So in this phase, okay, in this phase, we have daily being bearish. Okay, but our H4 here is bullish. Okay, so things like this can happen very naturally in the market. Why? Because this is your pullback phase on the daily. Can follow, right? Okay, so what a change of character means is that it's giving you an early sign that this bearish move is now shifting, it's pulling back. It's not necessarily changing the entire structure, but it's shifting, okay, from bearish shifting to bullish, right? So that's what change of character is. So the pullback happens, right, internally until at this point here, you can see another change of character. And this part is where you have H4 back into bearish structure and daily still remaining bearish. Okay, and this part here basically is in alignment. This part here is also in alignment. Okay, now once you understand this principle and this concept, right, where are we looking to take trades? Now today, if you're following the overall trend, okay, you'll be wanting to short the market in alignment with the higher time frame. Today, if you are more of a counter trend trader, you'll be looking to trade this pullback here. Okay, so there's no like which one is right, which one is wrong. I think at the end of the day is which style are you more in line with. Okay, so this is what I mean by internal structure. right? So you can start to see this is the start of the application where you look at 2 time frames. Okay, can you imagine like you add another one, okay, 3 time frames. But the principle kind of like just duplicate, right? Because on the higher time frame, you just repeat the process on the lower time frame, and then you find that alignment. Okay, so over here, let me just also jump into the chart and talk a little bit about this. Okay, so on the daily time frame, if you kind of label this again, okay, this would be my daily swing low. Okay, and then of course we have our daily breakout structure over here. Okay, now as the market is developing in this piece here, right, we actually can go down to the lower time frame on the H4. Okay, and you start to see that on the H4 time frame, the internals looks quite different, right? So from this high here, okay, we have a move down. Okay, the market pulls back. Okay, can follow. The market pulls back, so this becomes our initial swing low on the H4 time frame. Okay, and then what we do, we get a break and close below, so that becomes our H4 break of structure. So that causes a break of structure. Where is the highest point that causes this break of structure? Here. Okay, so that becomes our new swing high. The market pulls back, goes back up. Okay, that's at least a 50% pullback. So what happens? We have our new swing low on the H4. Okay, so as swing 4 happens, what happens over here? We get a break of structure. Okay, so I shift this over here, right? We get a break of structure. Okay, so when we have this break of structure, where is the highest point that causes it? This high. All right, so that becomes our swing high. Okay, this now becomes our swing low. Okay, so the market continue move higher, move down, go back up, and then eventually we get a break of structure at this point in time. Okay, so just to backtrack a little bit, right? At this point in time, okay, when we get a break of structure on this, okay, what do we have is we have now an alignment with the daily scale. Can follow, right? Because the daily, we are in a bullish market structure. And if I go back down to the 4 hour at this point in time, or in fact, I'll call this a, sorry, to backtrack a little bit more, yeah? Okay, to backtrack a little bit more. Actually, this will be a significant swing high already, okay, because we have a significant 50% pullback, right? And then as the market continues to develop, okay, at this point in time, we have a breakout structure, or we can call this a change of character, because it's first time from bearish turns bullish. Okay, the term not so important, right? I think the principle is more important. So when that happens, we have this here as a swing low. And follow, right? So at this moment, we have a alignment with the higher time frame. Okay, so naturally that is where we start to look for buy opportunity. Okay, so on the high time frame, this would be our daily swing high. Okay, so that will be our daily swing high, right? So any buy at this moment here naturally will target around that zone. Okay, why? Because that is a weak high, and then we have a alignment where the daily is in the bullish market structure. The H4 is shifting back to a bullish market structure as well, right? Because this is a pullback. Now we are shifting back. Okay. Now, obviously, hindsight looks very different from what we have right now, right? Because if today we play forward a little bit, okay, we do get that move, but we didn't really break that previous high, and eventually where we are right now is where the market now shift back towards a H4 bearish market structure. Okay, just follow through a little bit, right? This entire move here, this is the pullback. Okay, so this becomes our change of character. H4 wise, this becomes our swing high. Can follow, yeah? So we have a breakout structure on the H4. So right now we're back into bearish market structure on H4. So we don't have an alignment between the daily and the H4 at this moment. So what does it mean? It means that on the daily time frame, the pullback is still in development. Yeah. So why does it make sense? Because again, we haven't really come back to significant areas like 50%. Okay, so this is more of an introduction to you guys for understanding what I mean by swing high, swing lows, and then going into the internal structure itself. Okay, so far I hope it's clear. Okay, there are some terms that we still need to share with you. Okay, but that's the understanding between swing points, market structure, bullish, bearish, and then of course talking about the internal shift, right? Change of character and things like that. Okay, so change of character is useful, as I kind of explained just now already. Okay, it's useful when we use it to identify, whether the pullback may be starting, or a pullback is completed and the next swing is about to start, right? Which is basically what we illustrated just now. Okay, so change of character basically just signal that there is a potential shift, whether is it from bullish to bearish or bearish back to bullish. Okay. So change of character itself, as I mentioned, right, is a signal, it's an indication, but it's not a confirmation. Okay. So whenever we get a change of character, it doesn't necessarily mean that the trend is about to continue or the trend is about to shift. It's just telling you, hey, be careful. It seems like it is turning. Okay, so that's all change of character really is telling us. And follow, okay? So the whole idea, again, if I give you another illustration here, we have a bullish market structure. We have an internal shift in trend, in change of character. So it means that at this point in time, we can expect the pullback to get started, because this is a bullish market structure. After a break of structure, we expect a pullback. So the pullback happens all this here, and then when we get an internal change of character again, this indicates that, all right, maybe the pullback is done. We are likely to continue the previous bullish market structure. Okay, so just now what I mentioned is essentially, if today you are trend continuation, this is your time period to look for the buy, because we're in a bullish market structure. If you're a counter trend trader, this is your indication to look for a sell, because the market is previously going up. This is an indication of a reversal. Can follow? Now, obviously, if you're a more sophisticated trader, you can trade a pullback in the short term. You can trade a swing trade following the trend in the mid-term. Okay, so it's really, really flexible. It's really about understanding all the principle and how you decipher a chart. Okay, so the whole idea of that is quite similar, right? Whether is it a change of character as a continuation or a change of character as a reversal, it's just a context of where you apply it. Okay. Yeah. So this one, just give you an example again. Okay. So reversal is basically, initially we have a bullish market structure. We have a change of character. It can signify a potential reversal. Okay. Now, when do we know it's going to be a reversal? Only when we take out this low. Because at this point in time, any kind of a pullback here, as long as this low is being respected, we can continue to the upside. Then what happens is this change of character is simply a pullback. Okay. So oftentimes, right, this is more of like the principle and the concept behind. But when we are actually trading, okay, there are some complexity, and of course, nothing is 100% certain, right? So there's some probabilistic planning going in as well. Okay, so what I mean by this is I would want to introduce you to another principle called called discount and premium. Then we talk about demand and supply. Okay, now what is discount and premium? Okay, the whole idea is today, if you want to buy, you want to be buying at discount. If you want to sell, you want to sell at premium area. Okay, how we define it is very, very straightforward. We use a 50% mark. Okay, so basically this tool here, I'm just using a half. Basically 50% means halfway. Okay, I think that one quite straightforward. So the whole idea is, if this is a swing low and if this is a swing high, we'll just take the low to the high. The halfway point is where we'll mark out the difference between premium and discount. Okay, sorry, Bitcoin chart may not be the best because the move itself, right, is kind of like a little bit exponential. So if I take, just another one, right? Let's just take gold. Okay, so if today I work on gold, right, this is my swing low, this is my swing high. Where would be the 50% mark? You just basically measure. Okay, this is almost similar to Bitcoin, but I think better. Okay, anything above this is premium. Anything below this is discount. So today, if we're in a bullish market structure, we want to be buying. We want to ignore any buy signal at premium zone. We only want to focus on buy when the market comes back into the demand zone. Can follow the thought process, right? So that can help us filter false signal in buying around this area. Now, if today we are trading the pullback, okay, anywhere while price is still within the premium zone, we can look to trade the pullback in the short term, but then we'll only look to trade the pullback all the way until the until the discount area. Okay, because if the price continue to come back down here and enter into discount zone, you don't want to be selling it anymore. Because why? The market is in the bullish state and we have entered discount. Selling around that discount area is not high probable. The risk reward is just not worthwhile. Okay, so we're using the concept of premium discount to help us filter out trade and follow, right? So if you kind of go back to this slide, okay. At this point in time, this is a swing low, this is a swing high, right? 50% mark probably is somewhere there. Okay, so if you want to trade, the pullback itself, the change of character happens, the pullback happens here. In this case here, we're still in premium. Okay, we can trade this in the short term. Okay, will we buy around the zone? No, right? What we want is we want for price to pull back and then start to give us a change of character. That would give us a buy here because that's happening at the discount zone. Okay, can follow that thought process, yeah? Right? So understanding swing points, understanding structure, understanding internals, a little bit on the multi-time frame, understanding premium and discount gives you what we call a directional bias. Okay, it frame a trade to help you understand, should you be focusing and looking out for buy opportunities or should you be looking at sell opportunities? Okay, so that's what I meant by direction. Now, once you have your direction set, you need to have a setup, right? You need to know like, okay, so now I interested in buy. How do I identify where to buy? What price to get in, right? Where do I put my stop? Where do I put my target? Okay, now this is where the strategy kicks in, right? So over here, again, I have two, but basically we focus a lot more on the trend continuation setup, right? Because we want to kind of trade in alignment with the overall structure. Okay, I'll share with you the steps here, and then I'll walk you through a little bit in details as we progress as well. Okay, so obviously the first thing here is to establish your market structure, right? Because we're in a bullish market structure, we want to be looking for buy, vice versa. Okay, then the next step is to identify order block. Our entry will be near the order block. Sometimes we also include Fibonacci as confluence. Okay, and then what we do is we use our previous swing highs and low as our stops and target. Very, very straightforward. Okay, the challenge in this whole setup over here is to identify your demand and supply. Okay, because the entry, I think, is straightforward, right? Once you identify order block, the entry is going to be there. Your stop and target is just going to be your swing points. Everything is quite straightforward. The only challenging part that traders face is how to identify your order block, right? So let me walk you through on that. Good. Now this is the model in terms of how the strategy works, right? So you can see over here we have a market structure break, basically BOS. Okay, bullish market structure. Wait for the pullback towards our demand order block. Okay, as long as price remains above that swing high, above that swing low, this is your swing high. This is the area of entry. Okay, now this model here is in the assumption that you are looking at a singular time frame, for example, daily. Okay, but when the market comes into a daily order block, what you can play around with is you can drop to maybe on the lower time frame like H4 and H1 to enter your trade around that zone. Okay, yeah. So this model is kind of like in a singular perspective time frame. Okay, but we can always work around with multi time frames to kind of give us a better risk to reward ratio. Okay, now if you flip it, then obviously that's a bearish market structure. Okay, so great. Now you understand that, right? How do we identify our order blocks? Okay, so to identify order blocks, you need to understand this principle called fair value gap. right? So what is fair value gap? Is basically a kind of signal or indication where the market momentum is pretty strong. Okay, so what I mean by that is often, where we get like, in terms of equities over here, right? You get gaps, right? The whole idea of equities and indices getting gaps is because, markets is not 24 hours. Okay, when the market's closed, something happened, and then when the market opens itself, there's significant momentum, and therefore we experience gap. But in terms of FX, right, we don't really have like gaps. So how do we identify them? We then need to use a 3-candle pattern. Okay, so a 3-candle pattern looks like something like that. Okay, first thing first, you can see here, first candle, third candle, the low of the third candle and the high of the first candle did not overlap. That's your fair value gap. Okay, if the market is coming down, basically the same principle. This candle did not overlap. That's your gap. Okay, so again, the principle is quite straightforward, right? Why do we have a fair value gap? Because this momentum is strong. This momentum is strong. The market basically did not really pull back and then take off, right? The market basically just does, okay, kind of like push up, continue push up, right? So we have like no pullback essentially, right? You can see here, no pullback. So that leaves behind the gap, right? Let me just show you very quickly on actual chart, right? How does some of this gaps looks like? Okay, I'll just use gold, right? I mean, this is on the daily scale, okay? So what you can observe over here, you can see this is a very strong momentum push, okay? So as one of the most obvious one you can see, okay, if you zoom in a bit more, okay, you can see that this candle high and this candle low did not overlap. That's your fair value gap, right? Obviously, this is also another fair value gap. You can see that, right? Because there isn't much of an overlap, okay? So in situation like that, when you have like multiple gaps, okay, or multiple fair value gaps, oftentimes I would just say all of them are valid, but basically you just take the lower ones. Okay, same thing here. We have another fair value gap. Okay, so these are what I meant by fair value gap, right? If you take a look as the market is coming down over here, we also have this bearish fair value gap. Okay, this one here had a little bit of an attack here, right? So this gap some traders may consider it as it's being tested. Really depending on how strict your definition of that, right? But bear in mind, we are not trading the fair value gap. Okay, the fair value gap essentially is just indication that this push is strong. This push is strong. This push is strong because it leaves behind that fair value gap. Okay, now if today you look at stocks, okay, very quickly, can you see gaps? Those are all fair value gaps. Okay, so this move here obviously is a strong momentum push, right? It leaves behind gaps. Okay, this push down is strong. It leaves behind this gap. This push here is strong. It leaves behind this gap. Okay, so I think stock market is very straightforward. Okay, yeah. So once we identify and understand what fair value gap is, okay, identifying order block is going to be quite straightforward. One of the simplest way to do that is to use your first candle as your order block. Okay, so obviously if you are bullish market structure, you just term it demand. If you are in a bearish structure, you just term it supply. The more common name, we can just use order block. Okay, kind of universal. Right? So coming back to this, if you have a bullish market structure, this is your demand zone, right? Because after a fair value gap, the easiest way to identify it is this. Okay, obviously there are more complex stuff, ways of defining later I'll share with you as well. But the simplest way is to do that, right? First candle, demand. Okay, coming down, first candle, supply. Okay. So if I go back to the chart over here, okay, gold, right? In this case here, you can see this is your fair value gap. Okay, sorry, I haven't really changed that. Let me just do this now. Okay, if I can. Okay, that's your. Sorry, let me. average fair. So very, very straightforward, right? So over here, you can see as well as the market is going up. Okay, if this is our fair value gap, okay, where's our order block? This candle. Yeah. So let's duplicate this. Right. So that's the simplest way of identifying supply and demand zone. Right. Now, for those of you who are a little bit more experienced in trading, okay, the other way to use it, which may be a little bit more technically accurate, would be to look out for, okay, fair value gap, yes. Okay, instead of just taking the first candle, what you want to look out for is what causes the market to initially go up and shift back down with momentum. Okay, it's actually the last candle that turned from bullish to bearish. Okay, in other words, if I zoom in a little bit more, okay, the market was, okay, if I come back here, right? Okay, the market was going up, going up, and then at one point in time, it suddenly creates this momentum candle. Okay, so which area of the chart that actually created this momentum push is actually the last bullish candle that resulted in that reversal. Can understand the thought process, right? So the idea is people were buying, and then this is like the last push of buyers, and then after that, significant sellers comes in. That pushes the price down, right, with momentum. Okay, so the other method to kind of identify order block is to take, you know, when we create a fair value gap, right, we play one more candle forward. When we create a fair value gap, the last bullish candle, okay, you take from the low to the high, is the one that creates this strong push down, right? So that becomes your order block. Can follow, right? Okay, and of course, if you apply that principle here, if you go down to the lower time frame, sorry, I think my setting here just need to update a little bit. Okay, so that's your daily order block, right? On the H4, can you see that we also have a change in character? Okay, so that's actually pretty significant and important, right? Because you want to have the market significantly breaking some lows internally to confirm that this is a high. Okay, so what we have covered earlier is still very important. Okay, so when we get this change of character on the H4, then on the daily we know, all right, okay, it's an early sign of a shift. Okay, let me go back on. So your internal is here, right? So that's an early sign of a shift, and therefore we can now start to look out for, all right, this becomes a order block, right, that causes this. So in the event at some point in time, you know, if this actually decides to go back up, this becomes an area of interest which we can look to sell if we are counter trend. Why? Why? Because the daily is bullish structure. We are in a premium zone. So if we want to buy, we want to wait for the discount area to be buying. But at this point in time, we have an early signal that maybe the pullback is starting. Short term, we can take the sell trade. Okay. Now this is obviously in perspective, right? Because I'm looking at daily and H4. Obviously, you don't need to look at such a high time frame. You can apply the same principle, you know, on a H4, H1, and 15. Basically the same application, right? So that's the understanding of fair value gap, order block. Okay. Now, once you have that order block identified, the following steps of entry is very, very straightforward. Okay, you put your entry near the order block, your stop loss at the previous swing low, your target at your previous swing high. In this bullish market structure example, very nice little trade over here. Okay, opposite side, right? You have a bearish market structure broken. Okay, fair value gap, order block, entry at the order block, stop loss just above that swing high. take GU. Okay, again, on the daily scale, we may not get a lot of trade signals because we're on a higher time frame. Okay, so maybe for this example, we start to work on H4 as well as the hourly and the 15-minute or 30-minute. Okay, so H4 becomes our kind of a higher time frame. Okay, so very quickly, you don't need to really walk through, all the way from, previous historical price charts and things like that. You want, definitely you can. Okay, but what we can always do is we can just start off with like significant highs and lows, right? So what I observe over here is we have this low here broken, and then obviously that will establish our high. I can start from there. Okay, so I'm gonna start from here. This would become my change of character. Okay, because that's the first shift after a bullish structure. That's the first shift, so that can be termed change of character, right? If that's gonna be the change of character, this is gonna be my swing high. Okay, now if this is my swing high, do we have a swing low established already, right? Today, if I'm going to take a 50% mark, just to be a little bit more conservative, we don't really have that yet. Okay, however, suppose the market decides to pull back from here and tag the 50, then obviously this becomes my swing low. You can follow that thought process, right? So let's just visualize a bit and make some assumption, okay, so that we can forecast and plan a little bit in terms of our trade setups, right? If there's any. So if that's going to be my swing low, okay, then that 50% mark, let me just pull in this tool here. That is where our premium discount is going to be. Okay, so this is an early shift in trend. We are not technically in the bearish market structure yet, okay, but it's an early indication because we have this here. Okay, so today, if I want to sell this, this is my sell zone. Okay, today, if I want to buy the pullback, this is my buy zone. Okay, and of course, as this is pulling back, the nearer the price goes towards our premium zone, the less rewarding it is to trade the pullback. You can follow the thought process, yeah? Okay, so today, if I'm going to define my market structure on the H4, I would put it like this. Okay, so it's a shift. It's not a clear bearish trend yet. Okay, so obviously when you are trading the shift in structure, the probability may not be as high and as accurate as compared to if we have a very clean directional structure. Okay, but we're working on whatever the market is giving us right now. Okay, so what we have so far established: swing high, swing low, premium discount, break of structure. So this is where the trend is potentially shifting. Okay, so this is what I have established on the H4, right? So H4, if H4 is my higher time frame, then naturally I wouldn't be executing trade on H4. I can go down to M30, H1. Okay, sorry, some of this here I need to make sure that we can see. Yes. Okay, yeah, let me just make sure all this can be seen on a lower time frame. Okay, so now if you go down to the M30, for example, sorry, here, right? Okay, so H4, okay, we have established the directional bias, right? Okay, so M30 over here, what we want to see is if today I'm trading the pullback, okay, what I want to see is, do we have an alignment to buy with a target here? That's it. Okay, and of course, right now what we have is, let me draw it up. Okay, so this one here on the M30, that's consider. Okay, I usually don't work on lower time frame. Okay, so let me just put this here. Okay, that's your breakout structure. Okay, so if that's going to be your breakout structure, where is your swing low? This will be a swing low. Okay, on the M30. Okay, and then as the market is pulling back, okay, right now we have an internal shift. If you go to the lower time frame, what we have here is an internal bearish shift, right? But M30 as long as this low is still there, we are M30 bullish still, right? Because we have this break of structure, this low is still in control. Okay. Now, where would be our, let me put this in here as well. Okay, you guys are still following, yeah? Okay, so we have a low and high, right? We have a range that we can work with. Okay, now in this case here, as this break to the upside, right? As this creates the break of structure, okay, do we have a fair value gap? Okay, not really all the way until this area here, right? This entire push here, we don't really have a fair value gap. Okay, now this fair value gap has been tested. Okay, so oftentimes when it's tested, we don't really want to take it anymore. So in this entire push, we don't really have an obvious fair value gap. Okay, so oftentimes if we face something like that, we don't really have a setup, right? So bear in mind, just now we cover the setup here. We need to see, okay, we need to see fair value gap. Okay, over here. Okay, we need to see fair value gap, right? Because identifying order block, we need that. Okay, so in terms of this, right, we really don't have anything that we can work on. But let's say if, again, visualize a bit. Okay, the market decides to continue to go higher from here. Okay, and then we have this huge candle. Maybe this candle continue to come down a little bit and goes back up. Then we have the possibility of creating some fair value gap and then a demand zone here. Okay, so in that case, if this pulls back, we can actually trade this off from this. Okay, I'll try my best to see if, as we walk through some examples, do we get anything. Okay, or what you can do is, if you guys have any particular asset that you want me to cover on, I can actually look into it as well. Okay, I'll talk about gold. I think gold we can potentially trade a pullback on slightly lower time frame. Okay, so let me just work on gold. Okay, so gold here we covered just now. Okay, swing high, right? We have the break of structure, and obviously this would be our swing low. Coming in. Okay, so yeah, I'll do this analysis and I'll answer your questions, right? I do see the questions coming in now. Okay, so if we have a swing high, we have a swing low, right? On the daily scale, we are definitely bullish structure. Okay, so if I were to put this in, right? So again, you can see the directional bias here we're establishing, right? Sorry, daily structure bullish, expecting a pullback. Okay, why? Because after a break of structure, what do? We expect a pullback. Okay, then of course we can take in our premium and discount zone. Okay, so we're not in the discount yet, so naturally we don't want to be buying at this moment. Now, if I drop this down, okay, wait, let me just use the right tool. Okay, so if we go down to the 4-hour time frame, okay, what do we have, right? We have a bearish structure on the 4-hour time frame, right? Very, very obvious. Because why? This is obviously a break of structure. Okay, in terms of here, you can see break of structure. So naturally, this is our swing high. Okay, and then this is our swing low. Okay, you can go a little bit faster, right? Obviously, you don't need to label everything. Okay, but as I explained, I'll just label it as much as I can. Okay, this is a pullback. It didn't really take out the swing high, and that's where we start to see a reaction. Okay, so you can see this reaction comes from where? Okay, this is very, very clear. Fair value gap. Okay, and of course, with that fair value gap, the top of this here is your order block. Okay, now sometimes we add in fib as well, right? We take from swing high to swing low, and oftentimes you focus on the 71%. Okay, now again, really up to the individual. Some traders just don't use fib, and then they just say, I'm going to enter the demand and supply on the block, which in this case, come pretty much basically to the point. Some traders will just use the fib as easier reference. Okay, whatever that you feel more comfortable with. Okay, so basically we do see that reaction. Right now we haven't break this yet, but on the 4-hour time frame, we are essentially bearish. Can follow that, right? Okay, so any form of a pullback can be seen as a sell opportunity all the way until the expectation is the 50% mark on the daily. Okay, so right now, obviously, this opportunity is there, okay, but it's already done. Okay, so what you can do is you can even consider like maybe going down to the hourly, okay, or even the H4, okay, and the same thing applies, right? So over here you can see on the H1, on the H1 and H4 you do see slightly different, right? So if I clean up a little bit, okay, H1 here, this becomes your swing high. Okay, where is your H1 structure broke? Here. Okay, or here. Okay, so basically that's your change of character. Okay, so that becomes your H1 swing high. Okay, we have very obvious fair value gap here. This becomes your supply zone, your order block. Okay, now obviously for price to pull back all the way may not be as high probability. Okay, it can happen. So sometimes what we do, we take in fits. Okay, so we understand that, you know, for price to actually pull back all the way, it seems pretty deep. Okay, what we can then aim for is this is fair value gap. We have 71, can pretty much align around that area. Okay, you don't need like exact precision of turning point. That becomes our potential sell zone. Okay, your stop obviously becomes a swing high, your targets here. Okay, now this is on the H1 trade, right? Can you then use a H1 entry or a potential swing trade? Possibly. Okay, I mean, there are multiple targets again, depending on your horizon, depending on your preference of taking targets. Okay, but the bare minimum is this. Okay, can follow a little bit, right, in terms of the thought process over here. Okay, so then of course this is kind of like H1 structure from bullish turning bearish. Okay, again, why is it turning? Is because on the H1, swing low, high, low, breakout structure. Okay, this is our initial change of character. It's not a lower low, lower high on the H1 yet. You can follow the thought process, right? So why is it turning? Okay, so obviously we are not waiting for like all stars in alignment. Okay, when we're working on this here, we're essentially understanding what's happening on daily, what's happening on H4, and we are not waiting for like full alignment, right? We're looking at understanding the overall picture of what's happening. Like daily, we're expecting a pullback. H4, we are bearish. Okay, so that has a little bit of alignment already. Okay, and then on the H1 here, initially a bullish structure to a initial shift. That is also from bullish turn bearish. It may start to align with the H4, which aligns with the daily in terms of the pullback. All right. So in terms of gold, right, would this be a pretty good signal to consider in taking? Yeah. Okay, but of course you need to then assess, right? Are you a H1 trader? Are you comfortable with, you know, taking this trade with this kind of stop loss, etc., etc., right? There are still other things you need to obviously factor in. Okay, but in terms of the understanding of this principle and the application of this, you realize the strategy is not tough. Okay, it's more of the foundation of understanding how to define swing highs, swing lows, identifying structure, you know, understanding fair value gap, understanding the order blocks. Okay, all these things put together, identifying the entry is very straightforward. Okay, good. So let me take some questions over here. I see Bob have a question, kind of asking, does this also apply to stock? Yes, right. I know nowadays Nvidia is very hot, right? But we do see they drop recently, right? So again, if you want to apply on stocks, definitely possible as well. But just bear in mind that stocks, sometimes the 50% mark may not be the, how to put it, the premium discount is still the same, it's still 50%, right? But in terms of your swing highs and the significant pullback, right, you may want to use 38.2. Okay, the whole idea is because swing stocks nature, when they trend more significant than the FX market itself. Okay, so that's that slight tweak, but other than that, everything remains same. Okay, so if you go to like daily scale, okay, what you can see here, same thing, right? I'm just using an example of the video, right? If today you want to look for buy opportunities in the video, this is how I'm going to put things in. So right, that's going to be the low. That's your breakout structure, right? So obviously this is going to be a bullish market structure. Okay, do we have this as a swing high right now? Not yet, right? We haven't really touched that 3-2, but likely that is going to start happening, right? So what we can do is we can take, you know, kind of like an early anticipation that this would likely be our swing high. Okay, I mean, trading, we need to anticipate a little bit, right? Forecast a little bit. Okay, so today, if you are looking at buying this, where would be a good area to buy here, right? But right now we're anticipating that pullback, right? Okay, so if that's a pullback, you know, short term, if you want to go counter trend, can you consider selling this? Yeah, potentially, right? We have this, you know, internally you can see that change of character, right? Okay, so on the H, maybe on the H1, so play around on stocks here. You might want to do like daily and H1 instead of H4, simply because it's really not 24 hours. So H4 and daily may not have a huge difference in terms of the data points you can work on. Okay, so over here you can see we may have started that shift. Okay, we have some fair value gaps here as well. Okay, here as well. So this fair value gap is created from this bullish candle turn bearish. Okay, what can happen over here if you take your FIB and you can put in the 71? Okay, we do have a little bit of an alignment, right? 71 and just at the tip of that supply zone, right, or order block, you can call it. That will give you a decent sell opportunity for the near term. Okay, so you can look for a trade, something like that, or you can target all the way at a 50% mark. Okay. Okay, so you can apply the same thing here, you know, on stocks. Okay, naturally you can do that. Okay, another question here from Nanuri. Are higher highs and higher lows related to wave patterns in technical analysis? They do have some similarity. I mean, the methods itself, the school of thoughts are quite different. Right? But sometimes, you know, at the end of the day, we are still looking at price pattern, we're looking at charts. They may have some overlap and similarity. Okay, but they may not necessarily be the same school of thoughts. Okay. Okay, Edward here asks, can share some insights for ZIM and PLTR. Okay, cool. Okay, so same thing here, right? I think if you're looking at the daily, this is a very, very clean market structure. Okay, because we have like obvious swing lows and highs, and then of course we have breakout structure that's very, very clean here as well. Okay, and then of course this is going to be a high. If today you want to buy into this, right? Again, you want to wait for the 50% mark. Oops. Okay. Okay, you want to wait for the 50%. Yeah, that's correct. Okay. You want to wait for the 50% mark. It means this area to be a buy. Okay. On the daily scale, this is a potential order block, right? A bearish candle turns bullish, creates all the fair value gap here. So that's definitely a demand zone. Okay, so that opens up a possibility where this can be an opportunity to look for a buy. If you want to play around with multi-time frame, then you want to expect price to come in here, go to a lower time frame, forms a change of character, then that's your buy. Okay, so in other words, if you're going with lower time frame, you may not just buy immediately when it's hacked into the order block. you may buy in a little bit higher, but your stop loss can be tighter. Can follow, right? Because you're waiting for the lower time frame alignment. That's something you can do. Okay, but if today you just say, okay, I'm just going to be like buying it when you tag into that area, you want to also maybe align it with your 71. In this case here, it works almost perfectly. Okay, and then of course you stop your target. Okay, the visual of this looks a little bit off, right? But I'm using a log chart, right? So the idea is you can see while it doesn't look like it looks like the stop is very wide, it looks like the target is, you know, not as attractive, but you look at this, is actually 2.3 risk to reward ratio. Okay, so it's actually a very, very worthwhile risk to reward ratio trade. Okay, just that visually it doesn't look appealing, right? But that's for asset that has moved quite exponentially, because I've changed it to a log scale, right? If you take a regular chart, it looks like that. Okay, most of my charts I just turn it into log scale, just to take away that exponential move. But yeah, basically just be aware of it. Okay, right, so this is on ZIM, so PLTR. Okay, yeah, so PLTR, very, very quickly, we do have this as a breakout structure, right? We do have this as a swing low. We do have this as a swing high. So overall market structure is definitely bullish. Okay, the market did deep down into the kind of like discount zone. We have very, very obvious fair value gap here. Okay, and what created that, I would say, is basically your pullback here that creates. Okay, you can see a push up, the bearish candle that creates the fair value gap. That's your order block. Okay, so again, will the market really pull back so deep before going up? It's all about probability, right? But if it's very, very deep, sometimes it may not if we have a very nice trend and strong momentum market. So sometimes you can just consider, all right, let's take a look at my 71. It kind of aligns with where the fair value gap is as well. You may just consider, let's take that trade there. Oops, it's the opposite side. And follow that, right? So I'm looking at this two here. I'm kind of sharing you in terms of like trading together with the overall market structure, same direction. Okay. Yeah, hopefully that clears some of the principle and concept over here. Good. Any other questions? All good? Okay. If all good, I hope today's session has been pretty insightful for you guys, right? So that's basically the strategy itself. Okay. Yeah, just giving you different example on that, right? Hopefully that's clear. Okay, and of course it takes some practice, but the foundation of it, okay, what's really important is really understanding the structure, right? In terms of swing points, the definition of how to define breakout structure, change of character, working with multi-time frame, internal change of character, etc. Okay, and then incorporating fair value gap, demand zone, a little bit of FIBs, right? So you can see over here the FIB using here is 71, 100%, and 0%. There's no magical number as to why 71. It's just basically oftentimes it comes very nicely with where the fair value gap is. It's a good balance of risk to reward ratio as well. You can obviously change this to like 70%, 68%, 75%. It really doesn't matter, to be honest. Okay. We are not looking for like that super pit precision or entry, right? We're just looking at an area of interest that we can get involved in the trade. Okay, so I hope that helps. Bob here asks, what about closing gap strategy, right? Some say a gap is often closed. Not entirely true, I would tell you that. Okay, especially in terms of the stock market. Okay, I think any stocks you can look at, you know, not all gaps are are closed. Look at this gap here. Okay, if you're selling this in anticipation that this gap will be filled, it's a very, very tough trade to hold on to, right? FX market has a higher odds of the gap being filled, but it's not really because of the principle that gap tends to be filled, right? It's just basically the nature of FX market. It tends to be going up and down, right? So my personal take here is I will never trade, or I will never take a trade because I'm expecting the gap to be filled. Okay, now we do expect the gap to be filled as a form of expectation, but you don't want to be trading. I would say you don't want to have your trade reason. Or okay, recap of it. Okay, you don't want to take a trade simply because you expect the price to fill the gap. That's what I meant. Okay, yeah. So that's something that I would just share with you based on my personal experience. Okay. Which product technical analysis is good to start with? FX stock index or commodities? I would say it really also depends on your horizon. Okay, I mean, if you are pretty new, you want to work on H4 and above. Okay, each asset has their unique characteristic. Stock market is not 24 hours. So sometimes you may not be able to execute your trade as efficiently as well. But stock market on a technical chart perspective is technically going to be easier. Okay, because the factors that are affecting the stock market is not as complex as the factors affecting the currency world. Okay, but generally all of them can be done. Okay, in terms of technical analysis. So my suggestion is, if you're fairly new, just stick to the higher time frame. Things are a little bit easier if you go from 4 hour and above. Okay, yeah. So my suggestion, you can look at multiple concurrently, right? You can look at maybe a few major FX, look at major commodities like gold and crude oil, major index like maybe the S&P, okay, and then maybe you just pick some hot common stocks like maybe Apple, Tesla, or some of those. Okay, yeah. Good. So Bob question here about the slides. Yeah, I'll leave it to IG whether they are sending it out, right? In terms of the recording as well as the slide, because they do have access to those as well. Send them over. So I just leave to IG to make a decision as to those recording as well as the slides, whether to forward it to you guys. Okay. So good. Okay, are TradingView charts better than IG charts? At the end of the day, it's just a charting platform, right? I mean, I don't trade off TradingView. Why I use a lot is because it's really easy for me to illustrate certain things, walk through as well. The tools available allow me to do sharing more effectively. Okay, but I think at the end of the day, whatever works best for you, just stick to that. Good. Okay, so I'll pass the time maybe back to Benny over here to kind of do a wrap up for today's session. Okay, hope you guys can enjoy and take away something from today's session.
Yeah, thank you so much, Kar Yong, for your valuable insights today. If I may just keep everyone for just 1 more minute, just to help me fill up this survey form. You can just scan this QR code. Let us know what do you want to learn more about next, or any content, specific content that you are looking for. Just let us know, and we'll definitely try to cater to to your preference. So just fill in this, scan this QR code and let us know about what you want. Okay, if I may just bring you through to the next QR code that we have. If you want to open a trading account with IG, you can open either a live account, or if you just want to try our services, you can just open a demo account and you can play with play around with the platform and decide whether you want to, switch over to a live account next. So I'll just leave this here. And of course, thank you so much for coming in and attend this webinar on a Wednesday evening. I hope you have learned a lot today, and have a great evening, everyone.